Hello dear students, in other video I already discussed with double entry system of bookkeeping, personal real nominal account, golden rule, account debited, account credited. Now just to revise, go through some multiple choice questions for double entry principle. See, first one, the principle that calls for every debit to have equal credit in the books. The principle that calls for every debit to have equal credit in the books. Here options are given: single entry, double entry, three entry system and bookkeeping. So answer is double entry system. See, we already saw that double entry is a system whereby each transaction is recorded in the books of account twice. Means for every debit entry there must be a corresponding credit entry. See, after recording transactions in the books of original entry, the next step is to post them to their respective ledger accounts. What is posting? Posting is the process of transferring information from books of original entry to ledger account. So for every debit entry there must be a corresponding credit entry. So here answer is double entry system. Now next one, any dealing that involves the exchange of goods and services is, so answer is, it is a transaction. Any dealing that involves exchange of goods and services is known as transaction. Third one, posting the transaction in bookkeeping means. Posting the transaction, I just told you, posting the transaction means what? Posting means it is a process of transferring information from books of original entry to ledger accounts. So here you got the answer. Posting the transaction in bookkeeping means making the second entry of a double entry system, making a second entry from prime entry to ledger account. So it is known as posting. It is a second entry, making second entry of double entry transaction. Fourth one, a transaction where payment for goods is made at a later date. What is given? At a later date, sometimes somewhere in the future. So answer will be A, credit transaction. Answer is A, credit transaction. See, credit transaction means a situation whereby goods are bought or sold but payment is made later. Okay, so these transactions cannot be recorded in the cash account. Okay, because the payment is made at a later date. So it is known as credit transactions. Credit transactions. Okay, next one, fifth one, when goods or services are paid for at the time of exchange. So here payment is at the same time at the time of exchange. So it is known as cash transaction. Okay, because payment is made immediately at the time of exchange. So it is known as cash transaction, and if the payment is made at a future date later, so it is known as credit transaction. Sixth one, goods sold on credit. Okay, what is given? On credit means payment is not immediately. On credit to Anita should be debited to goods sold. Okay, on credit to Anita means we are not receiving immediately from Anita. So it should be debited to where? It should be debited to Anita's account. She becomes debtors for the business. Goods are sold to her on a credit. So Anita become debtor. So her account will be debited. So student, here Anita's account will be debited. But which account will be credited? So sales account. Sales account will be credited. And suppose it is on cash, then instead of Anita's account, cash account will be debited and sales account will be credited. But here it is given on credit to Anita. So Anita's account will be debited. Seventh, when purchase. Okay, now see, asset is purchased. Whenever any asset is purchased, don't give debit to purchase account. Okay, the word purchase we have to use only for the stock, merchandise, for the goods. So when purchase for cash should be recorded as, so what comes into the business? When comes into the business, asset increases. So give debit to when account, and which asset get reduced? Cash. So give credit to cash account. So debit when account and credit cash account. So answer is debit van account and credit to cash account. Don't give debit to purchase account. Okay, a van is purchased, so you have to give debit to van account. Purchase account will be debited only if the goods are purchased. Now the next one, cash taken from the business by the proprietor for personal use. This word is very important, that personal use, cash taken from the business by the proprietor for personal use. So answer will be debited to drawing account. See, cash taken from the business by the proprietor for personal use. So give debit to drawing account and give credit to cash account. So which account should be debited? Drawing account. Next one, ninth, goods bought from Nidhi. Okay, goods bought from Nidhi on credit should be recorded as. Now here, not asset purchase, but what is purchase? Goods. Goods bought from Nidhi on credit. So here when the goods are bought on credit, so give debit to purchase account. Give debit to purchase account. And from whom it is purchased? From Nidhi. So give credit to Nidhi's account. So debit purchases account and credit Nidhi's account. She is a creditor. And purchases being an expenses, nominal account rule, debit the expenses. So debit purchase account and credit Nidhi's account. See, what are the other options given? Debit cash account. So no, here is cash is coming. No, when the Nidhi will give us some cash, so at that time cash account will be debited and Nidhi's account will be credited. But here when we purchase from Nidhi, so in the future of course we are going to give her. Now what is the other option? A, debit Nidhi's account. No, she is not receiver of the goods and purchase account never credited. D is given debit sales account. No. Credit purchase account. This is totally wrong entry. Sales account always credited. So correct answer is purchase account debited and Nidhi's account credited. 10th one, the transfer of goods or services from one person to another is known as, so it is known as transaction. Transaction means transfer of goods or services from one person to another. Here doubt can arise that why purchase is not the answer, because not only in purchase transfer is there, but in the sale also there is transfer, right? So answer is transaction. 11th, double entry. Double entry means here 4 options are given. Check the all options to get the correct answer. We already discussed what is double entry. So answer is B. Double entry means recording of business transactions twice in the books of account. See, in the A option it is given transactions are recorded once, it is wrong. In the C option it is given transactions are recorded several, it is also wrong. And in the D it is given recording of business transaction in the trial balance, it is also wrong. So the answer is recording of business transactions twice in the books of accounts. Now the 12th one, the main books and those in which the double entry system of bookkeeping is kept are generally known as, so they are known as the principal books. Main books are known as ledger books. See, ledger means what? A ledger is a main book of account which record transactions following double entry principle. It contains personal account of debtors, creditors, real accounts, nominal account. So answer is ledger books. Next one, debit side of an account is, so this is very easy. Debit side of an account is, yes, you got the answer, students. Debit side of an account is, what is the answer? Left hand side of account. See, the left hand side of an account is known as debit and the right hand side is known as credit. Okay, so debit side of an account is on the left hand side of account. 14th one, and right hand side is credit side. 14th, Now 14, dash is used to write a short description of an entry. See student, you already know how to prepare account. We just saw debit side, credit side. Now account has 4 columns, namely date, particulars, folio and amount. So date includes all record of the date of the transaction. Particulars is a common column used to write a short description of the transaction. Folio is a column used to record pages of reference in the books, and amount is a column used to record monetary value of the transaction. So here what is asked, dash is used to write a short description of an entry. So short description of the transaction of an entry is given in the column particulars. 15, dash is used to write a date, month and a year of a transaction. So the answer is date column, not month column, period column or notes column. So the answer is dates column. Next one, which of the following should not be called as a purchases? Should not be called as a purchases. So answer is office stationery, because all others are called as a purchases. Whether goods are bought on credit or whether they are bought on cash, they are called as a purchases. Or item bought for the prime purpose of resale, they are called as a purchases. But the office stationery is not called as a purchases. A person to whom goods have been sold on credit, if we are selling goods to someone on the credit, that person is known as debtor. And a person from whom goods have been purchased on credit, a person from whom goods have been purchased on credit is known as creditor. So thank you students. Revise this and revise all other videos of double entry, personal real nominal accounts to get the concept more clear. Also I have posted the video for ledger accounts, how to post transactions in the ledger accounts. You can use that video too. And also subscribe the channel, press bell icon to get the notification of next video. Thank you.